Today's video from Father and Son Investing is going to answer the question, is now a good time to buy RYLD, and if so, why? But before we get to the answer to those two questions, actually, I need to spend just 2 minutes covering what RYLD is, what is in its holdings, what does it yield, and how often should one expect that yield. All right, so RYLD is the ticker symbol for Global X's Russell 2000 Covered Call ETF. Quickly, a covered call just means that one is selling the option to buy shares that one already owns at a set price. In exchange for that option to buy them at a set price, the buyer of that call option will pay a premium to the seller of the call option. So that is how RYLD is going to be able to generate some money for that yield. Now let's just talk about RYLD's holdings. Get ready, this is the full list. 1, 2, 3. What you're going to see here is VTWO, that is the ticker symbol for Vanguard Russell 2000 ETF. And you're going to see here the covered call options that they also have there. And you'll see a date there, and that's just talking about, every month that date is going to change because they're selling covered calls every month. They also have some cash in there as well. So you now know what RYLD is, you know what it holds, just those three things. And let's now talk about its yield. They indicate here that their 12-month trailing yield is 13.2%. Now I'm specifically using the word yield and not dividend. There is a significant difference between those two, and they are definitely treated differently when it comes to tax purposes. If you look here, Global X provides more details on what they're talking about. With the yield, they say the 12-month trailing yield is calculated by summing any income, any capital gains, and return of capital distributions. If you're not familiar with return of capital, it just means that they're simply giving you back your money. I'm not going to go into detailed explanation about that now. They're going to take all of those three things over the past 12 months and divide it by the sum of the most recent NAV, which is the net asset value, and any capital gain distributions made over that same period. 13.2% is amazing, but just remember that it's not just a dividend. It makes up those three things that I just discussed. Lastly, how often does it make a distribution? The answer to that is monthly. So you're looking at about 1% per month, and that gets you right up to around 12% per year. With that in mind, let's now answer the question, is now a good time to buy RYLD? And if so, why? I'm going to jump straight to the answer, at least my answer, and I'm going to say yes, and I have two reasons for you. The first reason has to do with inflation. Unless you've been living under a rock, you are very familiar with the fact that the United States is experiencing really the highest inflation since January of 1982. Currently, it's 7.9%. What does that mean? Well, essentially, things cost 7.9% more than they did last year. What else does it mean? It means just to keep up with inflation, your money needs to be making 7.9%. No bank account in the world is going to give you 7.9%. Pretty tough to get that kind of yield out of bonds. Definitely not going to get that out of U.S. government bonds. How are you going to get that? Well, one way to do that is with QYLD. Remember, I said that currently their yield is about 13%. So if we subtract off the 7.9% for inflation, then their true yield is right around 5%. Now, for people who are using RYLD for monthly income, that 13% beating inflation is going to be very significant and hard to do elsewhere. In fact, if we turn to this list of the top 100 highest dividend yield ETFs, we're going to see that RYLD is right here in the top 10, followed closely by QYLD. Now, not only is the yield that RYLD provides going to be important in fighting inflation, but the nature of the companies that are in the Russell 2000 is also going to make a difference. Imagine to yourself the top 3,000 companies within the United States. The Russell 1000 will be that top 1,000 largest companies. We're talking about companies like Apple and Microsoft, etc., all the way down to company number 1,000. Now imagine to yourself the next 2,000 companies in that list. So we're talking about company number 1,001 to 3,000. Those are going to make up what we call the Russell 2000. Now, most of those are going to fall in the small cap range. There will be some mid cap companies, and this sort of cross-hatched area here are companies that are, really going in and out of there that are on the border, and each year they may change. If you look here at the weighted averages, you can really see the difference between these market caps. The weighted average for the Russell 1000, 411 billion. The weighted average for the Russell 2000 index, 3 billion. Those companies in the Russell 2000 index for 2021 went all the way down to 257 million. So now that we know the type of companies that are in that Russell 2000, mostly small cap, let's just turn to an article here from Royce Investment Partners. And the question here says, can small caps beat inflation? It's an interesting read, and I'm certainly not going to cover all of it, but I want to point out just this one part of this article. It says here, the most important fact is that small caps are the only major asset class that's beaten inflation in every decade since the 1930s. And if we look down here at this bar chart, we'll see that it reflects that. Of course, CPI is the Consumer Price Index, and that's going to reflect inflation. CRSP 6 to 10. CRSP just stands for the Center for Research in Securities Prices. And imagine 1 to 10 is like the whole market. So 6 to 10 is going to be those small companies. And we can see here that the small caps are the ones that are going to be beating inflation in each of these decades. Now, of course, there's no guarantee that small caps will beat inflation this time, but given its history, I think there's a pretty good likelihood that it will. Now, the second reason I have for you why now would be a good time to be buying RYLD has to do with certain periods of time where the Russell 2000 actually outperforms the S&P 500. This is a nice graph that explains that concept pretty well. So we're going to look here, we'll see that the Russell 2000 really is going to come in here right around 1979. And we'll see moments where this is going up and down compared to the S&P 500. If we look at these particular times, we'll see that it was going up here on number 1 during 79, 80, and 81, 82 when there were recessions. We'll see that it's coming up here again as well, number 3, during 1990-91 recession and its aftermath. We also see this big upswing here, we'll call that number 5, and that was during times of turbulence such as tech wreck, 9/11, wars, and financial crisis. Just to give more color to this concept, we'll look at this statement on bottom line from CME Group. They say, although the Russell 2000 and the S&P 500 usually exhibit a high correlation, they can have periods of significant outperformance or underperformance relative to one another. The small caps have typically outperformed large caps during periods of economic turbulence, as we just saw in that graph. If we look at the chart for the Russell 2000, we'll see that indeed that was the case. There was a steep decline here, of course, when the pandemic hit. Its since has recovered, so obviously that would have been a great time to be in the Russell 2000. But we'll see now that in the past few months, it certainly has declined. While it certainly is not as low as it was during the early parts of the pandemic, it still is down. We're down about 10.7% over the last year. So this could potentially still be a good buying opportunity for the Russell 2000. So as VTMO goes, I would expect RYLD to go. We can see certainly that VTMO has declined in the last 3 months. I am hopeful that it would get back into that $90 range. Regardless, even if it doesn't, we can still expect RYLD to be providing that significant yield back to its investors because of the covered call options. So that's what I have for you today. Is now a good time to buy RYLD? I think it is for 2 reasons: because of inflation and the ways that inflation will interact with it, as I have discussed, and also because of the potential for capital appreciation. We discussed how the Russell 2000 tends to outperform the S&P during times of financial stress. Feel free to leave comments if you have other reasons for why now would be a good time to invest in RYLD. In the next video, we'll talk about the tax implications of RYLD and how to get around some of those tax implications. Please share this information with a young person in your life and make investing a family affair. And as always, until next time, enjoy your investing.